Hey guys, Boris Schlossberg, BK Forex. Welcome to our weekly Forex technicals for the week of 3/10/15. Dollar dominates trade, obviously. Past performance not indicative of future results. Trading Forex carries a high level of risk, may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leveraged products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you can sustain the loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary trade ideas provided on bkforex.com, should not be relied upon as a substitute for extensive independent research, which should be performed before making investment decisions. BK Forex LLC and bkforex.com merely provide information for your general information. The information and opinions presented do not take into account particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation before making an investment decision. They should tailor the trade size and leverage of their trading to their personal risk appetite. BK Forex LLC would not be responsible for any loss incurred in investments made by readers and clients as a result of the information contained on BK Forex LLC. Would not render investment, legal, tax, accounting, or other professional advice. If such investment, legal, tax, or other expert assistance is required, service of a competent professional should be sought. All right, let's start, I think, with the most important chart of the week, which is euro dollar. I mean, we'll get to dollar yen, which is also a very, very important trade. But the thing that I think really catches my attention about euro dollar, from a technical point of view, is that we have had not one, not two, but three, four different assaults on the 29.50 level. And so far, and obviously, this may even change because I'm recording this sort of midday Friday. This may even change before the close of the day Friday, but so far it doesn't look to be. The 29.50 level is holding. And I think that's really, really critical because we've certainly had a tremendous amount of bad news thrown at the euro. We've had the Italian downgrade just a few, basically an hour and a half ago. We've had positive U.S. data. We've had negative U.S. data. None of it has been able to penetrate the 29.50 level. And that to me is a critical support level because if that support level gets taken or given, excuse me, then you definitely have the opportunity, let's just go on a daily chart, for further downside price action. And further downside price action here would take us first into the 28.50s and then ultimately down to the 27s as the key support level. So there's no doubt it's pretty ugly price action on the charts. As a matter of fact, you're having almost a reversal here on the daily charts, but not quite. And that's the key thing. We have not taken out the lows and have not really taken out the key lows. I mean, we took out yesterday's lows, but haven't taken out the key support lows, which is 29.50 in my opinion. And that actually presents an interesting contra bullish case or contra trend case for the bull side, because the longer the support holds and cannot be penetrated, the more likely we are going to be in the process of a potential short covering rally. Now, short covering rally here definitely sees tremendous amount of resistance at the 31.25 level. But if we build enough steam here to kind of find support and then resume a counter trend rally, then the counter trend rally actually could, once it takes out 31.25, really develop all the way out to 31.33 and catch a lot of late shorts in a squeeze. So very much a potential. Still, obviously, the path leaves resistances to the downside, but until downside is broken, until you see evidence of 29.50 gone, and we start to penetrate below those levels, the chance actually of a turn is increasing by the minute. As always, when I always look at the charts, if the fundamentals are telling you one thing, but the price action refuses to cooperate, you have to be very, very careful and listen to the price action because it may be telling you a bigger story than what you think is happening in the marketplace. Now, the other, obviously, key pair this week, dollar yen. Dollar yen was a classic breakout trade this week. We've been talking about the idea of 94.50, 94.75 as the absolute critical level to take out in order for the uptrend to resume. This was a very, very negative damage done on last Mondays, that pretty much created this cap in the move. We tried to move several times over, and then finally we broke through this yesterday at 94.50, and of course once that got given, we came up to 96.50. Now 96.50 actually appears to be a little bit of a spike high, and this could be a reference high for those that are trying to basically try to pick tops and bottoms for the near term. As far as potential highs, there's really nothing in the offing all the way until probably parity. Let's go. We're going to have to go 3 years on the charts to really take a look at where we're at. You see how we've broken tremendous amount of resistance here. 95 was a key resistance. We took out that level, and we could be running free here all the way possibly to the psychological level of 100. I'm trying to see if I can go even further. If we go yeah, I mean, really on the charts, you don't have any chunkiness until the 100 level. So the longer term trend definitely looks strong towards the 100. The near term trend possibly a little bit of profit taking here, and possibly 95, 96.60 as a reference resistance level for the near term as we consolidate. But generally, dollar yen is an uptrend, and the better way to trade it is to the upside. Cable. Let's go back to more recent charts. Sorry, it's a 10. Here's the 6-month chart in cable. Cable just continues to grind lower. The problem with cable is it's an extraordinarily difficult trade to make, because what you can see with cable here is these pierces in the low zone and then sharp retraces, pierces in the low zone and sharp retraces, and this makes cable very problematic as a trade. You almost have to time it perfectly in order to achieve right entry into the position, because several times it broke the 150 level and then retraced back out. Now we broke the 150 level again. We found support underneath the 148.84, and we could have the danger of breaking out. In many ways, cable really looks to be a much better sell on rallies than a sell on momentum, because the momentum here tends to be very, very jerky, and it faces tremendous amount of retrace risk every time you try and do it. So where are the resistance points? Obviously 51 is a resistance point, 52 is a resistance point in cable. This whole area is now staggered resistance against cable. And any kind of, and now I would even say the 50, 1500 and 1505 are probably resistance points against which you could consider selling on a resistance basis. A break of the 48.84s, which is the new fresh lows, takes us, again, I'm going to try and go to the chart and trying to find where the real line of support here. Here you have, basically, there's a modicum of support here underneath the 49s, which is what you're seeing, and then a much, much steeper fall all the way out to 145s. So another possible way to consider this this chart is to simply trade very, very large and very long term. You basically sort of say, okay, I'm a long-term bear on pound. 55 is my stop because it clearly negates my long-term positioning, and then you simply ignore all of the intraday jerks and target 45 as your potential target here on a break. Clearly, pound broke a lot of support everywhere you see here, and it's very much in a negative structure, but because of its jerky fashion, it's very hard to trade. So it's worthwhile to consider either very, very wide stops, or possibly trading against the retraces, or possibly avoiding the pound altogether, since this is a difficult trade to make. Aussie consolidating. We found we've talked about this in our daily BK webinars, where we talked about the idea that this was a doji candle showed change of trend, but change of trend has been relatively minimal here in the Aussie, and the Aussie is definitely running into some chunkiness. Not even at 103, 103.50, but just even below 103s, 102.50s now becomes the kind of a resistance level. So Aussie is chop. Very, very difficult to find directionality here. It may retrace back and try to test the 101.50 for a double bottom test. We may break out here, but then the 103.50 comes in as a key support. You may want to consider, if you're trading against resistance, somewhere around here as a chunky resistance. Of course, a break above 103.50 would really change the tone of Aussie and put a much more positive spin on the trade, and would, I would say, change the tone to a much more bullish posture. So a break above 103.50 and a hold here really opens a move all the way up to 104.50, 105, because that would really create a very definitive bottom. But until we get there, it's just chop, very difficult to trade, and kind of hard to find directionality out of this move for the time being. Now, dollar CAD is a much more interesting consideration, and dollar CAD is an interesting consideration actually to the downside. Now, what we had today was very, very good Canadian employment data, which kind of quelled a lot of concern that Canada was decoupling from U.S. on an economic basis, basically putting the idea that North America is definitely doing better than the rest of the world and could attract more flow into the Canadian dollars as we go. However, when you look at the chart here, still very much a point of indecision. The 103.50 is clearly a strong cap, right? So if you're selling against resistance, you would feel relatively confident selling against this unless and until it was broken. If 103.50 gets broken, this is a very, very negative construct for Canadian dollar. Dollar CAD really has scope then to go to 104.50, 105 on a possible breakout. On the other hand, this level holds, and more importantly, this 102.50 breaks down and holds. Right now, we've tested the 102.50, but it's really coming not closing below that on a closing basis. We would like to see it close on a closing basis below that to confirm to us that there is Canadian strength. That would confirm a stronger move all the way down to 101.50 as a possible Canadian dollar strength. Now, another possible way, of course, to look at this is to see if you wanted to consider the crosses. And amongst the crosses, obviously, Euro-CAD to me is most interesting technically because Euro-CAD is, again, testing this 133.30 level several times. Quite over here. So a lot of support here. Again, we tested it. It did not close below it. Need to close below it on a daily basis. We close on 103.30 on a daily basis. It opens up a path all the way to 31, possibly all the way down to 129 as you have a big distribution and you get relative strength on a Canadian dollar. Another way to trade this is if you're sort of more preferable on the yen front is to look at CAD yen, which has also performed well, but now is coming up against this this 95 resistance right over here, which needs to clear. So we're well off the highs here today. Again, showing that the Canadian dollar just simply can't hold strength for the near term, and also, of course, we're getting sell off a little bit in the yen itself. A trade in the CAD yen is more of a trade in the dollar yen than it is in the Canadian dollar. The Canadian dollar is a sort of a minor support story on this particular pair, so I wouldn't choose it as my first Canadian cross to consider. The last Canadian cross to consider, possibly, is Aussie CAD, which we've talked about quite a lot in the past, where 106 is clearly a long-term, this is a 3-year chart, and you can see this. The 105, 106 is a very long-term resistance level here. We've come up right against it. We have a shift of perception here, where the Canadian data, which was considered to be weak, now may begin to be considered to be stronger. Again, we would like to see bigger evidence of weakness here in the Aussie CAD, which means that I would like to see the 105 broken and closed on a daily basis. So far, it hasn't been done here, but if we can close below 105, that opens scope all the way down to 104, and possibly on a longer-term basis all the way down to the bottom of the range to 102.50. But anyways, this is a trade that might be interesting to get involved with if we see further weakness below 105s. So that's kind of how the week shapes up from a technical basis. I'm wishing you guys the best of luck and the best of trading. This is Boris Schlossberg, over and out.